all these billion-dollar condo towers right now full of these type of condos, and people aren't able to sell them, and it's just a ticking time bomb for the banks because everything in Canada is leveraged. I don't care if it's the developers building the project or it's the people who bought all the condos. They're all getting loans from 5 banks. That was the interview line for an entry-level job, and the housing market is absolutely crashing. The Canadian dream is absolutely dead. No wonder so many people are trying to flee and escape Canada. And you've now got the Liberal government that has appointed this absolute clown. And again, it just shows the open-air corruption. The ex-Vancouver mayor to become the housing minister, and this is what this clown had to say.
We've got to create some incentives and opportunities for people to get into the market. We got to make sure that people's assets are obviously protected, and that's the market housing.
Yeah, so you got to make sure that people's assets are protected. You know, the funny thing about this, guys, is the government doesn't have a clue what they're doing. In fact, every time they try and do something, they often get the opposite result. So if they're trying to protect asset values, God help people in the housing market, because that is not going to happen. And we can actually explore, and I can show you, because we've got all the data, exactly why this housing market is crashing right now. And that's the main thing that is very easy to find out, actually, that people just don't know. So Canadian real estate prices slip sharply, further downward pressure builds on the Canadian housing market. And then basically you can see what has happened to the benchmark prices. I don't really like the benchmark prices. It's kind of a manipulated number, but that's what they're using here. But even with that, benchmark prices are down to 2021 levels. They're down again after the April figures were all published for everywhere in Canada. So again, it just shows how Canadian house prices continue to go down. And this is the growth chart here. And you can see that they failed to grow by anything again. They've had 2 attempts at this and they failed to even break positive. So this is an extremely weak market, and a lot of people should be asking the question, well, why is it so weak compared to the past? And you've got to analyze that, because it's really easy to find out. In fact, if you go to Better Dwelling here, Canadian cities have seen investors buy up to 100% of newly constructed condos, and this was also happening for new construction houses as well. The investor share that was happening is just crazy. Ontario's seen nearly 3 in 5 condos go to investors. So the people who are propping up the market were the investors, as it always is. And I'm not talking about foreign investors, I'm talking about domestic investors. And they have been buying up all the supply over the past decade, pretty much in Canada. And it's just becoming more and more of a share. And that's how they've been able to do it. Because when you look at the average income in the city of Toronto, $83,000. I mean, that is completely insane. 5 times that income, you're at $415,000. Nobody is buying a house for $415,000. And yeah, you could argue that you might be able to get a 2-bedroom condo, but then you're going to be paying condo fees of upwards of probably $1,000 plus per month on top of your mortgage. So getting qualified for a condo even is just completely insane. But again, when you look at the incomes, it shows that there's obviously been a lot of fraud. I mean, you don't have to be a rocket scientist to work that out. And that's why areas like Brampton are seeing such heavy selling, so many power of sales, because obviously that has been the center of car insurance fraud. Now it's the center of housing fraud. It's always just the center of fraud in general. Funny that, but we won't get into that here. So again, 3 in 5 condos go to investors. And if you look at the share across places in Ontario, I mean, it's completely mind-boggling, isn't it? You've got Norfolk, 100% of condo apartments constructed after 2016 with non-occupying ownership in 2020. 100%. It's absolutely crazy. Woodstock, Leamington, London. Obviously, London was an area that was heavily, just overly invested. Kitchener, Cambridge, Waterloo. Again, these were all these areas that were booming in the Mania, which was just a more extreme version of of what you saw in the lead up to 2020. It just amplified it with the low interest rates, the fact people weren't paying their bills, everything was being deferred and being put on hold, and people weren't doing anything. So they were saving money, and the only place that people would put money in Canada is housing, because they don't have a clue what they're doing. When you actually look at somebody who invested in the S&P 500 over the same time, they just obliterated anybody who invested in housing. So you can see here, Toronto here is at 58.7%. So most of the market in these areas is represented by investors. And the thing is, with declining rents, investors are not looking to invest in the market anymore. It makes no sense. And that doesn't look like that's going to change, because again, you've got to look at the immigration policies that are coming forward. You've got to look at political sentiment. You've got to look at the fact Canadians are sick and tired of the high immigration when they can't even find a job. So with that happening and the sentiment being flipped on immigration, you're going to likely see lower levels of immigration, which is going to mean less renters, which is going to consequently mean less investors. And that's going to mean more downward pressure on housing, because the average buyer can't afford it. They just cannot afford it. It's a long way from affordable levels. So a lot of people, they keep asking, and I've seen it on videos and podcasts, like, why is this happening? Like, why aren't buyers stepping in to the market? And it's because there isn't enough of them. It's because the investors were the majority of the market, especially when it came to new construction, which is an absolute disaster. And then Table Salt put here, average Canadian home price falls below 700,000 for the first time since 2021. So this is big, because you have to also account for all that inflation that's happened, and you know that things right now in the housing market are extremely broken, and what the banks have on their balance sheet, all that debt, is very, very risky right now, because it rests on the back of Canadians being continually able to pay back that debt, despite the fact we already know from other bubbles like the one in the United States that when you get this frothy, and Canada is even worse, that does not lead to good places when you've got deteriorating credit quality. So that's what's happening. Breaking $350,000 losses are starting to appear in the one-bedroom Toronto condo market. This is crashing. But what I want you to also think about with this is all these billion-dollar condo towers right now, full of these type of condos, and people aren't able to sell them, and it's just a ticking time bomb for the banks, because everything in Canada is leveraged. I don't care if it's the developers building the project or it's the people who bought all the condos. They're all getting loans from 5 banks. You don't have to be a rocket scientist to work this all out. So there's a heck of a lot of risk, because in most of these banks, in fact nearly all of them, you've got over $500 billion in loans, and the amount of cash that they have on hand to satisfy if they have a lot of defaults and stuff like that is just in the couple of billions range. So, you know, it's insane. It's like 1-2% of just their mortgage loans, and you know, you could easily have default rates going way beyond that. And as John Flynn put here, you're just seeing ever increasing power of sales. And this is just in the Toronto Real Estate Board. But there are other power of sales that are happening everywhere and all over in those more rural areas where people flooded to. They might have lost their job, and they've got no chance of getting a remote job right now, because remote jobs, they're competing with third world countries unless you've got a really good skill set. And that means that basically, if you're just trying to do an average job and you're competing with third world countries, you're never going to afford to live in Canada, because the absolute insanity is, even though Canada is becoming a third world country, it has insane prices. I mean, we covered last week Shazzy saying that Paris, Ontario was more expensive than Paris, France. It just goes to show what's happening. And it's not just happening in Canada. You know, the US housing market is falling apart. I've been visiting people here in the UK, and the same thing is happening. There's for sale signs everywhere right now, and it looks like the housing market has peaked and everybody is renewing into these high rates, just like in Canada. The same thing is happening, and it's happening also in the United States. We know the United States, though, is a much bigger economy that influences Canada and Canada's economics. And we know that Canada is in a depression. So with the US heading into a recession, I mean, it's insane. And here you go again, like the University of Michigan Consumer Sentiment Index is at the lowest levels since some of these biggest recessions that you've seen here. So again, it's not just in Canada. Everywhere is falling apart here. The risk of the financial system blowing up is increasing. And what people don't understand is if you circle back to 2008, when Canada entered a recession, even though Mark Carney seems to have forgotten that, when the US was in a recession, those recessions weren't declared until December 2008. And then it was declared that from January 2008, US was in a recession, Canada was in a recession, and many people would say the financial crisis was what caused the recession. But it's actually what's even worse than a recession that people don't understand and is very unspoken, and it's the credit crunch that follows after, because the credit crunch was the horrific blow to the economy which really turned things upside down. So even though like nominal GDP and real GDP started to tick up and you weren't in a recession technically, we always talk about recession technically, but what the does that even mean anymore? Who even cares about that? It's what the average person is going through in the economy, and wealth inequality in all these Western nations is so bad now that the GDP numbers aren't even accurate. Neither are the GDP per capita numbers. All the numbers are skewed and and just cannot be trusted. Yet people go on TV and they're like, oh yeah, this statistic is really accurate. But you know, again, this is going to happen. Financial crisis. You're seeing more Americans fall behind on car payments here. It's above even the global financial crisis levels. So again, you've got more and more things that are just showing you how bad and how stressed the financial system is. And Canada is in a recession, as I've said many times, and it's heading into a depression. It's just how long it takes for that to cause a financial crisis. And when you've got the levels of debt that Canada has, but when that job market gets bad and they can't even get a new job, which is what has happened since we've gotten to 2025 now with the job market, that's when things really start to unwind, because people have nowhere to go. They have to default. And we're already seeing that more and more people are in fact losing their homes. So anyway, I want to thank you so much for watching this video. If you've enjoyed this video, I'd highly recommend you check out that video there. And then if you want to help support the channel and get the best VPN, visit the link in the description below, expressvpn.com/marketmania, and I'll see you on the next one. Take care, guys.